All right, welcome back to Talk Tickers, everybody. Today we're going to take a deep dive into Barrack Gold's Q3 2024 earnings call.
Yeah, I'm excited to jump into this one. Always a lot going on with Barrack.
Always. So much to unpack.
Absolutely.
You know, they're exceeding expectations pretty much every quarter, it seems.
It seems that way. This quarter, no exception.
Yeah, and, gold prices at record highs.
Right.
But what I thought was really interesting was CEO Mark Bristow emphasizing that long-term thinking. Mining, it's not about quick wins. It's a long game.
It is. And that kind of sets the tone for how they approach everything, doesn't it?
It really does.
Really interesting to see.
Yeah. It's not a sprint. It's a marathon.
A marathon, for sure.
And they're not even thinking about any big acquisitions right now.
Yeah. It's almost like they're saying, hey, we've got so much internal growth potential, we don't need to go on a shopping spree.
Exactly. Which is a pretty powerful statement.
It really is, yeah. Speaks volumes about, their confidence.
It does, in their assets and their vision.
Absolutely.
So let's get into some specifics now.
Okay.
We know Barrack has faced some challenges this year, but they're still delivering some really impressive results. What are some of the key performance indicators that jumped out at you?
Well, I think the adjusted net earnings per share, up 33%.
Wow, that's huge.
Compared to last year.
Yeah.
Yeah. And they've managed to maintain that dividend at $0.10 a share.
That's great, especially in this environment.
Yeah, sends a strong signal to investors.
It really does. And they're achieving this growth all while making significant investments.
Right.
Let's start with their North American operations.
Okay.
Specifically, Nevada gold mines. What's the big picture there?
Well, they're basically pumping resources into Nevada, trying to revitalize that whole operation for the next decade and even beyond.
And it's a pretty big undertaking, right?
Huge.
It's especially when we're talking about replacing those depleted reserves in an aging mining complex.
Mm-hmm. That's exactly right. And they're doing a fantastic job of it. Their brownfield exploration replaced 75% this year.
75%. That's incredible.
Isn't that something?
It is.
And it's not just about replacing, it's about expanding production, too.
Of course.
They've brought that gold quarry roaster expansion to full capacity.
Right.
And they're ramping up at Gold Rush.
Which has been a game changer for them, no doubt.
It has.
But what's got me really intrigued is this 4-mile project.
Oh, yeah.
I feel like this is the crown jewel in their Nevada portfolio. What do you think?
Oh, it could be. The potential at 4 Mile it's just huge.
Massive.
The grades are more than double Gold Rush.
Wow.
And early indications are suggesting it could be worth even more than their entire stake in Nevada gold mines.
That's mind-blowing.
Yeah.
So they're doing a lot of drilling and scoping work right now.
They are.
Feasibility study planned for next year.
Right.
I think 4 Mile is going to be a big, big story for Barrack in the coming years.
Absolutely a project to watch. Now, let's shift gears a little bit, head down to Latin America.
Go.
And the Asia-Pacific region. I think we got to talk about the turnaround of Pueblo Viejo.
In the Dominican Republic.
Yeah.
Oh, that's incredible.
They've taken this mine that had a very uncertain future.
Right.
And turned it into a powerhouse.
Yeah, a powerhouse that's projected to produce, what was it, over 800,000 ounces annually.
Yeah, until at least 2040.
That's remarkable.
It is, and I think it really speaks to their commitment.
Absolutely. To maximizing the value of their assets.
Absolutely. They've expanded the plant, optimized operation, and they're now targeting an 80% recovery rate this year.
That's incredible.
Yeah.
And we can't forget about Porgera.
No, of course not.
Over in Papua New Guinea. They've had to navigate, well, let's be honest, some incredibly complex challenges.
They have.
Natural disasters, tribal conflict.
It's a lot to deal with.
It is.
Yeah.
And yet they're still delivering impressive results.
They are. The Porgera team deserves a standing ovation.
They really do. Despite those setbacks, they've managed to revive a mothballed mine.
Yeah.
64% quarter-over-quarter production increase in Q3.
That's resilience.
That's resilience. So let's jump over to Pakistan now.
Okay.
Where Barrack is developing this massive Reko Dek copper gold project.
Yeah, it's potentially a game changer, not just for Barrack, but for the global copper market.
Absolutely. This could be one of the largest copper gold mines in the world.
It could, and they're on track to complete that feasibility study by the end of the year.
And yet I feel like the market is still undervaluing Reko Dek.
It's a bit puzzling.
What are your thoughts?
I think maybe investors are hesitant. It's a new project in a region that doesn't have that long history of large-scale mining.
Right.
But Barrack, they've got a proven track record.
They do.
And they're not wasting any time.
No, they're already building their team, preparing the infrastructure, getting early works underway.
Yeah, they're not messing around.
So it's definitely one to keep our eye on.
Absolutely.
Now, before we move on to Barrack's, impressive performance in Africa, I do want to touch on their commitment to responsible mining.
Yeah. It's commendable how they prioritize sustainable practices.
They've been actively closing tailings facilities safely, methodically. 7 already completed. 5 more planned for next year.
It's clearly not an afterthought.
No.
It's woven into how they do things.
Absolutely. So let's shift our focus now to Africa and the Middle East.
Okay.
A region that's consistently delivering value for Barrack. What are some of the key highlights there?
Well, I think it really showcases their ability to unlock value from diverse assets. They've breathed new life into those previously closed mines in Tanzania.
Right.
Lumwana's transformed into a cash-generating machine.
It really has.
And their flagship mine, Kebali. It's a prime example of sustainable mining in action.
Let's talk about Kebali's sustainability efforts for a second. They're leading the charge in renewable energy.
Absolutely.
Which is a huge deal in an industry, let's be honest, that often gets criticized for its environmental impact.
That's very true.
So they already have 3 hydropower stations. They're commissioning a new solar and battery storage plant next year.
Wow.
Which is going to increase their renewable energy mix to 85%.
That's incredible.
I know, right? For 6 months out of the year, they'll be running entirely on renewables.
That's impressive.
It really is. It shows that profitable mining and environmental responsibility can go hand in hand.
I can.
Now, before we get to our wild, this is not financial advice, trade idea, I want to hear your thoughts on Lumwana's transformation. This mine was actually losing money when Barrack acquired it.
Yeah, it was.
And now they're turning it into a potential world-class copper operation.
It's a great example of their expertise in optimizing those underperforming assets.
Right. They're investing heavily in the Lumwana Super Pit expansion project, which is nearing completion. And this project's really designed to unlock the mine's vast copper potential.
Exactly.
It's a remarkable turnaround. And it just shows their long-term vision.
It does.
They're making these strategic investments. They're not just focusing on short-term gains.
No.
They're securing their future.
Right.
As a major copper producer.
And the timing couldn't be better. I mean, Lumwana is scheduled to start producing copper in 2028.
Okay.
The same year as Reko Dek.
Wow.
This means they're perfectly positioned to capitalize on that anticipated copper supply deficit.
Which is going to be huge
Right, yeah.
with the global transition to renewable energy technologies.
Exactly.
Okay, so they're playing the long game, not just in gold, but in copper as well.
Absolutely.
Very strategic. Let's dive into some numbers now.
Okay.
Barrack's projecting a 30% increase in gold production from existing assets over the next few years.
Wow.
It's a remarkable growth story.
It is.
Especially considering they've consistently replaced their gold reserves over the past 5 years.
It's a testament to their discipline.
Yeah. Their operational excellence.
Yeah.
Their relentless focus on exploration.
Absolutely. They're not just extracting gold. They're actively discovering new deposits.
And they're doing all this while maintaining a very strong balance sheet.
Right.
Since the 2019 merger, they've reduced debt by $3.5 billion.
Yeah.
Invested $11.2 billion in developing their mines, and returned over $5 billion to shareholders. It's incredible.
It's pretty amazing. They've struck this remarkable balance.
They have.
Between investing in growth, reducing debt, and rewarding shareholders.
So let's talk about, well, the elephant in the room.
Okay.
The gold price.
Yeah.
It's at record highs. But gold equities, including Barrack stock, they haven't quite kept pace.
Right.
So why the disconnect?
Well, I think there are a few factors at play. First, there's often a lag between changes in the gold price and the performance of those gold stocks.
Makes sense.
Takes time for those higher prices to flow through.
So patience is key.
Patience is key.
What else is contributing to this?
I think some investors are, they remain a little skeptical about the sustainability of these high prices.
Right, that potential bubble that could burst.
Exactly, yeah.
But remember, Barrack is managing their business conservatively. They're basing their plans on a $1,400 gold price.
Right.
So even if there's a pullback,
you're well positioned.
They're well positioned.
Yeah.
And let's not forget about the strong fundamental reasons that are driving those gold prices higher.
Absolutely.
Global inflation concerns, geopolitical uncertainty.
Yeah.
Central banks, printing money.
Right.
It's all driving demand for gold as a safe haven asset.
It is.
Which bodes well for Barrack's long-term prospects.
It does.
But here's what I find really interesting.
Yeah.
While some investors are hesitant about gold stocks, we're seeing this clear trend of Western investors pouring back into gold ETFs. What do you think about that?
It suggests that, there is growing confidence in gold as an asset class.
Right.
Even if there's some hesitancy about individual mining companies.
Exactly.
Yeah.
And as that confidence builds, and as Barrack continues to deliver on its growth strategy, I think their stock has significant upside potential. But of course, that's just my opinion. We're not offering financial advice here.
Not at all. Our goal is just to equip you with the information you need to make your own informed decisions.
Exactly. Speaking of informed decisions, are you ready to unleash our outrageous but plausible trade idea?
Oh, I'm always ready for that.
I knew you would be.
But before you do, let's remind everyone.
Of course.
This is purely for entertainment purposes.
Always, always.
We are not financial advisors. Any investment decisions, they got to be made after careful research, considering your own risk tolerance, all those things.
Absolutely, absolutely.
Yeah.
So, now, let's have some fun.
Okay.
We've talked a lot about Barrack's copper ambitions. Lumwana and Reko Dek set to come online in 2028.
Mm-hmm.
Right when the copper market's projected to experience that significant supply deficit.
Exactly. Which could mean good things for Barrack.
Exactly. So this is not financial advice, but trade idea is to buy Barrack stock now.
Okay.
And then sell covered call options expiring in 2028 with a strike price, significantly above the current market price.
Wow, that's a bold move. So you're essentially betting that Barrack's stock price will surge in the next few years as they ramp up copper production and capitalize on that supply deficit.
Exactly. And the beauty of this strategy is that even if Barrack's stock price doesn't reach that, sky-high strike price by 2028, you still get to keep the premium.
You do, but there are risks.
Of course.
I mean, what if things don't go as planned?
Sure. What if unforeseen challenges arise or the copper market doesn't develop as predicted?
Right.
This is why this is not financial advice.
Absolutely.
It's a thought experiment. A fun way to apply what we've learned about Barrack, about broader market trends.
Right.
But anyone considering this trade idea, you've got to do your own due diligence. Weigh the potential rewards against those risks and only invest what you can comfortably afford to lose. We'll be back in part 2 to delve a little deeper into Barrack's global operations and uncover even more insights, so stay tuned.
Sounds good. Welcome back to Talk Tickers. We're continuing our deep dive into Barrack Gold.
It's easy to get excited about those record gold prices.
Oh, absolutely.
But what I'm really impressed with Barrack is their discipline.
Yeah, their approach.
Yeah. They're not just chasing the next shiny object.
Right.
They're making strategic investments.
Yeah.
Thinking long term.
It's about building a sustainable business, right?
Right, exactly. And it shows in their reserve replacement record,
Yeah.
consistently exceeding depletion over the past 5 years.
That's right. And they're projecting further growth in both gold and copper reserves.
It's like they have a knack for finding it.
They do. Their exploration teams are incredible.
We really are. So let's go back to Africa for a second.
Okay.
We talked about Lumwana, but there's another success story there. Tanzania.
Oh, yeah, Tanzania. It's a great example of how Barrack can take underperforming assets and turn them around.
They took 2 mines that were closed when they acquired them, right?
That's right. Closed during that 2019 merger, and now they're significant contributors.
It's remarkable. What's the key takeaway there for investors?
I think it shows that Barrack has the expertise, the financial strength, the vision to turn things around.
Right. They don't shy away from a challenge.
Not at all. They embrace them.
Now, let's circle back to something we touched on earlier. Their commitment to renewable energy.
Right. It's not just a PR move for them.
No, it's a core part of their strategy.
It makes good business sense, too. Reducing their reliance on fossil fuels, lowering costs.
It's a win-win for everyone.
It really is.
And Kebali is a perfect example with its hydropower and that new solar plant.
Leading the way. It's a blueprint for sustainable mining.
Okay, so we've talked about different regions, specific projects. What's the overall takeaway for investors?
I think the big picture is that Barrack is firing on all cylinders. Record gold production, expanding copper, strong cash flow.
They're doing it all.
Yeah.
But here's the thing. If they're performing so well, why isn't their stock price reflecting that?
That's the big question, isn't it? Like we said before, there's often a lag.
Right, so patience is key.
Definitely. And some investors are still wary. worried about the gold price,
That bubble talk.
Exactly.
But Barrack is managing conservatively.
They are. They're not banking on those high prices staying forever.
Exactly.
And let's not forget the reasons gold is rising. Inflation, geopolitical risks.
Right. Central banks printing money.
All of that supports gold as a safe haven.
Which is good for Barrack long term.
It is.
But it seems some investors are still on the fence.
They are.
But here's what's interesting. While some are hesitant about gold stocks, we're seeing this surge in gold ETF investments.
That's a fascinating trend. What do you think it means?
It tells me investors are getting more comfortable with gold.
Right. Maybe not ready to jump into individual mining companies yet, but...
But they like the asset class.
Exactly. And as Barrack keeps delivering, I think their stock will catch up.
I think so too. They have everything in place. Great assets, a strong team, clear vision.
And their commitment to sustainability is only going to attract more investors.
Right. That's a big factor now.
It is.
Okay, before we get to our trade idea, let's give our listeners something to think about.
I like it. Hit them with a provocative thought.
Okay, here it is. We've talked about Barrack and copper, the energy transition, that growing demand. What if that transition speeds up?
Oh, interesting. What if it accelerates faster than anyone expects?
Exactly. What are the implications?
Well, we could see a copper shortage, unlike anything we've seen before.
Right, and that puts Barrack in a very strong position.
Exactly. A copper boom. And that leads us perfectly into our "this is not financial advice, but" segment.
Always fun. But first, the disclaimer.
Right. We are not financial advisors. This is for entertainment only.
Of course, always do your own research, consult a professional, all that good stuff.
Absolutely.
Okay, so Barrack, copper, 2028. Remember,
The supply crunch. Yeah.
what if, instead of selling covered calls, we sell put options expiring in 2028? Strike price, way below the current market price.
Okay, so you're betting on Barrack holding steady, even rising.
Exactly. If it stays above that strike price, we keep the premium. If it dips, well, we buy the shares, but at a price we're comfortable with.
It's a risky move, though, right?
Oh, absolutely.
Yeah.
Any speculative trade like this has risks.
What if something happens and the stock plummets?
Right. That's why this is not financial advice, just a hypothetical.
A thought experiment.
Exactly. Always do your own research, understand the risks, don't invest more than you can afford to lose.
Those are wise words.
So in part 3, we'll dive into Barrack's financials. Stay tuned. All right, welcome back to Talk Tickers. We're wrapping up our deep dive into Barrack Gold, and now we're getting into the nitty-gritty, the financials.
Yeah, the numbers. Time to see if they back up the story.
Exactly. And from what we've seen so far, I'm optimistic.
Me too. They've had impressive growth, replaced reserves, strong balance sheet.
All while dealing with a lot of global uncertainty.
It hasn't been easy, but you can see their efforts paying off in their financials. Revenue for the quarter, $3.1 billion, up 12% year over year.
It's great.
Yeah. And their all-in sustaining costs, that's AISC, came in at $11,185 per ounce of gold. Pretty remarkable cost control.
Especially with inflation the way it is, keeping those costs down is huge.
Absolutely. It means they can stay profitable even if gold prices dip.
Exactly. What else jumped out at you?
Their free cash flow, still strong, $548 million for the quarter.
Wow.
Gives them a lot of flexibility, keep investing, pay down debt, reward shareholders.
It's that financial strength that makes me bullish on Barrack. They're not just getting by, they're thriving.
Absolutely. And they announced their 21st consecutive dividend increase. Pretty consistent.
That's a great sign for investors. So, looking ahead, what financial metrics should we be keeping an eye on?
Well, I think AISC is going to be key. As they bring Lumwana and Reko Dek online, they need to keep those costs in check.
Right, those are big, complex projects. Costs can balloon quickly.
Exactly. And debt levels, they've done well reducing debt, but those big projects will likely mean taking on more.
It's a balancing act.
It is. They need to manage that debt carefully.
Absolutely. Anything else?
Their capital allocation strategy, how they balance those investments, debt reduction, dividends, buybacks.
It's a lot to juggle.
It is.
Yes.
But so far, they've been pretty good at it.
They have. Okay, I think it's time for our "This is not financial advice, but" segment.
Always a highlight. But remember, folks, this is for entertainment only. We are not financial advisors.
Of course, always consult a professional. Do your own research.
Right, this is just hypothetical.
So we've talked about Barrack, copper, that potential boom.
Yeah, 2028, things get interesting.
What if, instead of covered calls, we sell put options expiring in 2028? Strike price, way below the current market price.
Okay, so you're basically doubling down on Barrack.
Yeah, betting that the stock will hold up or even rise. If it stays above the strike, we keep the premium. If it dips, we buy the shares, but at a discount.
Sounds good, but it's risky.
Oh, very risky.
Yeah.
If the stock plummets, we're in trouble.
That's why this is not financial advice.
Exactly. It's just a thought experiment, something to consider.
But always understand the risks. Never invest more than you can afford to lose.
Couldn't have said it better myself. So that wraps up our deep dive into Barrack Gold. Their performance, their plans, their financials. We've covered it all.
It's been a fascinating look at a company that's really firing on all cylinders.
They are. We hope you found this insightful. And remember, knowledge is power. The more you know, the better decisions you can make. Thanks for joining us, and we'll be back soon with another deep dive.